Hello, guys. It's me again. Remember, I'm the guy that will tell you and that will show you how to get rich by um, analyzing some stock and pointing to you the good stocks that you can invest in and get rich. Now, remember, my strategy works for those who are long-term investors. So if you're a long-term investor, be my guest. And today, the company we'll be looking at is Southwest Airline. This is a very popular airline company. Let me make sure you're seeing this. So again, my strategy work for Southwest Airline. And don't forget my name. My name is Joseph Ejike Oji. So let us dive right into it. See whether a Southwest Airline is good for you. When I say good for you, I mean for long-term investing. Long-term is buying and holding strategy. To buy and hold strategy, you can hold the stocks for 2 years, and if the value appreciates, you sell it for the capital gain and then invest it in a different stock. 5 years is, to me, is much better than 2 years, so long as the stock is good. As a matter of fact, as long as the stock continues to be good, you can hold it, keep holding it for 5 years, even 6 years. But then you want to make money, right? So that's why when you appreciate, you sell it, get your gain, and put your gain in a different company. Okay? Anyway, I believe you get the point. So let us see what Southwest Airline has to offer for us. Let's see what it has to offer. Now, the best way to begin is to get a brief information about Southwest Airline. Well, as you all know, it's a very popular airline, mainly for domestic carriers, domestic air travel. So it operates as a passenger airline company that provides scheduled air transportation services inside United States and in near international market like Caribbean, those areas. Anyway, my analysis for Southwest Airline, as usual, will be based on 3 things. We'll cover 3 areas. First area is the balance sheet. I'll use the information from these 3 areas, balance sheet information, not all of them, just the one within it. The company income statement, and of course, cash flow statements, and cash flow statements, and cash flow statements. Okay. Then the company's general stock information. Okay. So that will tell us whether the company is doing well or not. Okay. So now let us begin. And where do we start? Of course, you go to where you can get affordable information. And where is the place? At Yahoo Finance, we can get a lot of information free of charge. And of course, if you're an investor or a business person, you want to cut down your expense account as much as possible. And one of the ways of doing it is getting information from where it is free for everyone. So we are now in Yahoo Finance. The first thing we do is to put the symbol to pull out the information for Southwest Airline. Remember, the symbol is LUV. So we're going to use that to put the information from Yahoo Finance. So I'm going to type LUV here, LUV. Southwest Airline pops out. You can see it from here. I just want to make sure. Okay. Yep. You can see from here. So I'm going to click on it to bring it out. As of today, you can see that Southwest Airline, the stock is trading at $29.76 per share. Actually, it went up 2%, about 2% today. And then after hours, it is trading at a negative. It lost 0.2%. percent. Now let's look at the get more information about the stock of Southwest Airline. The first place we'll be looking at is the graph that will tell us the performance of the shares of the stock of Southwest Airline. Let's look at it. So I'm going to click on it so you can open up. Now, like every other stock, the stock of Southwest Airline is erratic. Okay, you can see that it's erratic, up and down, up and down. Again, to make sense from this, I'm going to insert a 200-day moving average. Again, I'm always using 200-day moving average because it is, I recommend long-term investor. So not buying today and selling next week. No, it is buying today, wait for a year, hold it for a year at least, or hold it for 2 years. I recommend at least 2 years, so that all the factors that will push the stock up or down will begin, and then you can now sell. But if you ask me, I would choose 5 years. Yeah, but 2 to 5 years is good. Anyway, let's put the 200-day moving average. So I'm going to change this to 200 days. Okay, and save it. You can see the line that has the moving average. You can see that it shows that it is trending down. Now let me make it. Oh, this is from 2019 to the current year. Yeah, there was a time it was slumped really when COVID-19 struck and the air travel was affected significantly. But anyway, from then it went up, but it's trending down, and it is for a long term, for 5-year period. It said that the stock is gonna go down, so it's trending down. The moving average. Now, not only that, for most of the time, this stock has been trending below the moving average. See the stock and see the moving average, and it's trending between that. So any stock that is trading below the 200-day moving average indicate a bearish trend. So for long-term investors, this suggests potential challenges and uncertainties in the coming years or months. So that is a bad signal for us for Southwest Airline. However, it is very important to conduct a deeper analysis to understand the reason why the moving average is trending down, and so to find out if it is something that is specific to this company. So in other words, we dig deeper to see why this trending moving average is trending down in the future. Even when I make it 2 years, see, it is still trending down, and the whole stock you can see is trading below the moving average. That's not good. Okay, at least for long term. This is for 2022. Now, if I make it 5 years, same thing. I make it maximum. See, maximum is, but that's a long time. So I can't, even at that, it is still trading below the moving average, even though it's uptrend. Oh, it's trading above moving average for more than 5 years. I would say that is a long time to know. Things might change drastically. Who knows? Nobody knows. It might change for the good or for the better. But 5 years, I go by the 5-year and the 2-year trend. Now, okay. Now, let us go back and see if we can do more dig deeper to see what is wrong, yeah, or what is right, not right. Okay. So for that, we'll be looking at the statistics for Southwest Airline. So I'm going to click on the statistics and then scroll down. This is for the year 2022 to 2023. And let's look at the profit margin. Profit margin is 1.95%. You see, Southwest Airline profitability metrics indicate a modest performance because of this, overall. See, 1.9. Okay, let's see. So the profit margin and operating margin stood at 1.95% for profit margin and 1.96% for operating margin, respectively. So this highlights the company's ability to generate a narrow profit from its operations. Okay. Now let's look at the return on equity and return on assets, which comes under management effectiveness. So with respect to management effectiveness, the return on assets, the return on assets and return is 0.53%, and the return on equity is 4.52%. So you can see them right here. So these two figures suggest that the company may not be exceptionally efficient in utilizing its assets and equity to generate returns. So now these two things haven't seen that, so we want to know more. So we move on to the next stage, which is take a look at some of the few items I saw on that are in the income statement and which are relevant for our analysis. Remember, as always said, you don't pick only one metric. Look at other metrics, and of course, it's also important to look at the industry as well. So look at this revenue here, to 25.44 billion. What does it tell us about the company? Well, I would say well, generally speaking, the best way to say that the company, Southwest Airline, reported a substantial revenue of 25.44 billion with a quarterly revenue growth. You can see quarterly revenue growth of 4.9%. See? So while the revenue figure is impressive, concerns may arise from the significant decline in quarterly earnings growth. You can see the quarterly earnings growth right here at negative 30.3%. That's a lot a huge decline. Yeah, if you ask me. So this decline could potentially affect the stock's long-term performance. Okay, and investors should investigate into it. If you're a long-term investor, why is it this negative? Because of that, it might scare some investors away and make the stock not to appreciate the way it should appreciate in value. Yeah. Now, we are now ready to look at some of the general financial health and leverage. For that, we'll start looking at the balance sheet. According to what we have in the balance sheet, Southwest Airline held total cash of 11.73 billion in total cash, which indicates a strong liquidity position. However, the total debt of 9.27 billion, look at total cash, and this is total debt of 9.27 billion, resulted in a relatively high total debt to equity ratio of 83.89%. That's a lot. So that means it has a financial, it doesn't have the financial leverage doesn't look good. That's the best way to say it. So this leverage can pose risk during economic downturn on challenging market condition that will impact the company. Look at the current ratio. See the current ratio of 1.21. Not bad. Matter of fact, the current ratio wasn't that bad because he was saying that, well, I will have lost something like 1.9. But anyway, it says 1.21 for the current ratio. So 1.29, the best way to say that the current ratio of Southwest Airlines current ratio of 1.21 suggests that the company has enough current assets to cover its current liabilities. So that means it can pay their debt, the bills, the current the bills that are due within a month or a few months. You can cover it because for every $1 it owes, it have $1.21 to pay it, even though it is a small current ratio. Okay. Now the book value is 18.54, okay, which may be a consideration, consideration for long-term investors who value stock based on tangible, only those who value stock based on tangible assets. Now, let's look at the cash flow. Now, the cash flow statement, it says that according to what we are seeing here now on the screen, operating cash flow is 3.32 billion. And this indicates a positive cash flow from its operations. However, the levered free cash flow of negative 689 million is negative value. Imply that the company may be investing more cash than it generates. Okay, so it may be implying that and that could impact its long-term financial stability. At this point, there's one metric I want to take a look at. I think we most time I usually miss it. It's EBITDA, earning before interest, tax, depreciation and amortization. Okay. Now it is 1.55 billion, and that this value provides insight into the company's operational profitability. So for long-term investors, this EBITDA of 1.55 billion, long-term investors should consider it in the context of the company's total debt and overall financial health. Usually, lower EBITDA, a lower EBITDA related to debt. Let's see the debt here. Let's see. Debt. Okay. Okay, let's see. Okay, right. A lower EBITDA related to debt. Total debt of 9.27 billion. Or, and the EBITDA is 1.55 billion. So a lower EBITDA related to debt may indicate a higher financial risk, which could affect the long-term investor if the company struggles to service its debts or fund growth relatives. Growth initiatives, to say. So that it will be difficult, hard for them to get a loan to invest in new projects. Okay, because they have a lot more debt than the EBITDA. Anyway, so recommendations that I will give to long-term investors. Well, Southwest Airline, as you can see from all these numbers that we just went through, Southwest Airline presents a mixed picture as a long-term investment. So while the company boasts a substantial revenue base and a strong liquidity, its profitability margins are relatively low. And recent decline in the earnings growth are concerning. See? So not only that, the high debt to equity ratio and negative levered free cash flow also raise a financial risk consideration for this company. Not only that, what we saw from the 200-day moving average, which signals a bearish trend. So I would say for long-term investors who are more comfortable, those of them who are more comfortable with taking risk, okay, you can proceed with caution. But overall, based on my assessment that I just did now, and my general assessment, I will say that for Southwest Airline, the decision is to sell, not buy, sell. Okay. For if you're a long-term investor, if you have this, it's better to sell it instead of buying it. Okay. So but if you haven't bought it already, don't buy it. This is my own opinion, but because I'm too risk averse. I like risk, I take risk, but this is too much risk for me. So what am I saying here is that if you are a long-term investor who is very comfortable with taking higher risk, proceed with caution and conduct a more thorough analysis of the airline industry prospects. so that you know if this is an industry, event or not. But for long-term investors who doesn't want too much risk, again, the decision is to sell or don't buy it. Yeah. I hope you enjoyed my lecture today, and I hope you get some important message from it. So thank you for listening, and I will see you in my next lecture when I will review another company. Okay, bye-bye.